Welcome to HouseLux Estate, your reliable guide to everything real estate. We're here to break down the complexities of the property market, providing you with insightful analysis, expert advice, and the latest trends. Whether you're a seasoned investor or just dipping your toes into the property pool, HouseLux Estate is your go-to resource. Our mission is to empower you with the knowledge to make confident, informed decisions about your real estate journey. In today's episode, we'll uncover the process of building wealth through real estate rentals. First and foremost, understanding the concept of real estate rentals is key. So what are they? Simply put, real estate rentals are properties that are purchased with the intention of earning a return on the investment, either through rental income or the future resale of the property. Now, why are they an attractive option for wealth building? This is due to a combination of factors. 1. The steady cash flow from rental income can act as a safety net in times of economic uncertainty. 2. The potential for property appreciation over time. And 3. The tax benefits associated with owning rental property. It's like having a golden goose that keeps laying eggs. The potential returns? They can be significant. With a well-chosen property and effective management, the profitability of real estate rentals can surpass many other types of investments. Done correctly, real estate rentals can be a steady source of income. Now, the real journey begins with choosing the right property. Think of it as a puzzle where each piece is a critical factor that contributes to the overall success of your venture. One of the most prominent pieces is the location. Like a fine wine, a good location only improves with time. It should be a place where people want to live, work, and play. Look for areas with growing job markets, thriving economies, and excellent amenities such as schools, parks, and shopping centers. Next, consider the type of property. Single-family homes, multifamily homes, and commercial properties all have their unique advantages and challenges. Single-family homes often attract long-term renters, while multifamily homes can provide a higher income potential. Commercial properties, on the other hand, often come with longer leases and can be a stable source of income. Then, you need to dive into the market trends. Is it a buyer's market or a seller's market? Are property values on the rise or decline? These trends can provide valuable insights into the potential profitability of your rental property. It's like reading the winds before setting sail. Knowing the direction can make the journey smoother. Of course, let's not forget the potential rental income. This is the heart of your investment. Aim for a property that can yield a rental income of at least 1% of the purchase price each month. This isn't a hard and fast rule, but it's a good benchmark to start with. Also, consider the potential for appreciation. While cash flow is important, the real wealth building power in real estate often comes from properties appreciating over time. Look for areas poised for growth or properties that you can add value to through improvements. Lastly, don't ignore the condition of the property. A property in need of significant repairs might eat into your profits. However, a property that only needs minor updates could offer an opportunity to boost its value. Remember, the right property is your ticket to maximizing rental income. So, choose wisely and let the journey to wealth building through real estate rentals begin. Once you've identified the right property, the next step is financing. Let's delve into this crucial stage of building wealth through real estate rentals. There are several financing options available, each with unique benefits and drawbacks. First up, we have the conventional mortgage. This is a loan that isn't guaranteed by the government. It typically requires a down payment of 20% of the property's value. The benefit here is that you build equity faster and avoid paying private mortgage insurance. However, it necessitates a bigger initial investment, which may not be feasible for everyone. Next, there's the Federal Housing Administration, or FHA loans. These are government-insured loans that allow for a smaller down payment, sometimes as low as 3.5%. They're fantastic for first-time homeowners or those with lower credit scores. But remember, lower down payment means more to pay off in the long run and potentially higher monthly payments. Then we have hard money loans. These are short-term loans from private investors, usually based on the value of the property rather than your creditworthiness. They can be obtained quickly, making them ideal for flipping houses. However, they come with higher interest rates and are not suitable for long-term rental properties. Lastly, there's seller financing. Here, the seller acts as the bank, and you make payments directly to them over a set period. This can be a great option if traditional financing isn't available, but it often requires negotiation and legal expertise. So how do you choose the right financing option? It largely depends on your financial situation, your long-term goals, and the type of property you're investing in. A good rule of thumb is to aim for the lowest possible interest rate and ensure your rental income can cover the monthly mortgage payments. Remember, real estate is a game of numbers, and understanding your financing options is key to winning. It's always wise to consult with a financial advisor or real estate professional to make the best decision for your situation. Choosing the right financing option can make or break your rental income. Now that you've got the property and financing sorted, let's talk about property management. This is a critical part of building wealth through real estate rentals. Managing a property is more than just collecting rent. It involves maintaining the property, dealing with tenants, and ensuring legal compliance, among other responsibilities. Think of your rental property as a business, because that's what it is. And just like any business, it needs effective management to thrive. When your property is well managed, it remains in good condition, which helps retain and attract high-quality tenants. High-quality tenants are those who pay their rent on time, respect the property, and stay for longer periods. This reduces vacancies and increases your rental income over time. You have two main options when it comes to property management. You can either do it yourself or hire a professional property manager. If you choose to manage the property yourself, you'll save on management fees. However, you'll need to invest time and effort into learning about property laws, tenant relations, and maintenance issues. You'll also need to be available to handle any emergencies that may arise. If you prefer to hire a professional property manager, you'll benefit from their expertise and experience. They'll handle all aspects of property management for you, from finding and screening tenants to dealing with maintenance issues and legal matters. This can be a great option if you have multiple properties, live far from your rental property, or simply prefer not to deal with the day-to-day tasks of property management. Whether you choose to manage the property yourself or hire a professional, remember that good property management is essential for increasing your rental income. It ensures your property remains in prime condition, attracts and retains high-quality tenants, and complies with all relevant laws and regulations. Proper management ensures your property is always in top shape, attracting high-quality tenants. Building wealth through real estate rentals is not just about one property, it's about growing your portfolio. Picture this. You've successfully navigated the world of real estate rentals, you've chosen a property, financed it, and now you're managing it. But the journey doesn't end there. To truly build wealth, you need to think bigger. You need to expand your horizons and grow your portfolio. The first strategy is diversification. Think about investing in different types of properties, residential, commercial, or even vacation rentals. This way, you're not putting all your eggs in one basket, and you're tapping into different rental markets. Next, consider the concept of leveraging. This is where you use the equity from your existing properties to finance new ones. It's a powerful tool that can multiply your investments and increase your wealth building potential. Another strategy is to reinvest your rental income. Instead of spending it, put it back into your portfolio. Use it for renovations, upgrades, or even as a down payment for your next property. And lastly, always stay informed. Keep an eye on the market trends. Know the ins and outs of your area and always be on the lookout for potential investment opportunities. Remember, building wealth is a marathon, not a sprint. It takes time, patience, and a well-thought-out strategy. But with each property you add to your portfolio, you're one step closer to achieving your financial goals. A larger portfolio means more rental income, accelerating your wealth-building journey. Let's recap what we've learned today about building wealth through real estate rentals. We started by understanding the concept of real estate rentals, highlighting the potential for wealth creation in this industry. We then moved on to choosing the right property, emphasizing the importance of location, property value, and potential rental income. Next, we talked about financing the property, discussing the various options available, from traditional mortgages to real estate investment loans. We also delved into managing the property, from finding reliable tenants to maintaining the property to ensure it remains a profitable investment. Lastly, we explored strategies for growing your portfolio, such as reinvesting rental income and leveraging equity. These steps, if followed diligently, can set a solid foundation for your wealth-building journey in the real estate rental market. Remember, building wealth through real estate rentals is a journey, not a destination. Thank you for joining us on HouseLux Estate. Don't forget to subscribe for more insightful content on real estate.